Right. Good afternoon, everyone. Thank you so much for joining me for this session. I'm going to give you a glimpse into how AI and new technologies are impacting my work, the work of a venture capitalist. So my name is Claire, and I have the pleasure of being the CEO of Be Angels. Be Angels is Belgium's largest business angel group, active in Belgium and Luxembourg, investing in early stage startups. And I also founded, and I'm the managing partner of the Scale Funds, which are post-business angel, pre-Series A funds, so helping with a bit later stages. We are a Belgian fund, but with a geographic scope which is a bit bigger, investing in the Benelux, France, and Switzerland. So I'm going to give my talk today as a venture capitalist. Why? Because for those of you who are not familiar with early stage investing, business angels are private individuals who take their own investment decisions. Venture capital funds actually have teams. They are professionals. It's a professional job, and they have teams that analyze investment opportunities and that take investment decisions. So what we're going to talk about today is how do new technologies impact the work of venture capital teams. Maybe first question, how many of you are investors in the room? Okay, few. What you're going to see is we're going to talk about the impact for the teams, but also for the founders, but you'll see it's everywhere and in everything we do. So maybe just let's set the scene. You may know that venture capital is a very competitive process, right? So we always say that we only invest in about 1% of the investment opportunities that we see. If I look at Scale Fund 3, which is our latest venture capital fund, we've already received more than 300 investment propositions since March. Okay, so that means that we deal with a lot of information because we end up investing in 1% of the companies that submit, and in 99% of the cases, we still have access to information that we have to analyze in some form or another. We call this the yield rate. So basically, there's an enormous amount of work of data analysis that goes into sourcing with very few positive outcomes. But so how is our work, the work of venture capital teams, changing with AI and new technologies? I'm going to give you information about three main things that we do. The first is obviously deal sourcing, so finding investment opportunities. The second is analyzing markets and preparing basically more information about the investment opportunity. And the third one are feedback loops, so how we interact with founders and how we can improve the interaction with founders. So when it comes to deal sourcing, obviously with AI and new technologies, we have access to an enormous amount of information. Now, what we did before, but now the pace of and the speed of the information that we can gather is amazing. So how do we find information about investment opportunities in databases, on the web, in literature, desk research, LinkedIn? So that's what analysts used to do in VC funds. That's what they still do. But with new technologies, they have access to a sort of empowerment of that deal sourcing. So we get much more funnel coming in. With much more diversity. It's very broad. Of course, we can only scrap and analyze and receive what's visible. So that means that if you go to a conference and as an entrepreneur, you start talking about the fact that you're going to fundraise, this is maybe something that we are going to be able to gather. If you are under the radar, we might not have access to that information as part of our deal sourcing process. I think where the pace of acceleration and change has been dramatic is in market analysis. So now with all of the information that we can get and how fast we can structure it for the partners to analyze, we get so much more information about your total addressable market for founders, your competition, the latest transactions, valuations that have taken place in your industry, where your industry is going, how it is challenged, past transactions. So what usually took us weeks is now taking us hours, right? So you may wonder, okay, so what is the role of an analyst in a venture capital firm? We'll come back to that in a minute. And feedback loops, well, everything goes much faster, and I'm sure it's in your day job as well. But basically, we streamline all of our processes. We try to be much more efficient every step of the way. So that means we receive more information. We try to structure it faster. We try to give feedback to the founders much faster about whether they are eligible or not for investment. Because remember, venture capital funds have investment strategies, so things they invest in, don't invest in, stages that they invest in, don't invest in. So we try to accelerate that feedback loop with the founders. And so we try basically to spend our time where we think it matters, which is speaking to the people, meeting the teams, meeting the founders, and taking the time to really get to know each other. And in terms of feedback loops, what technology enables us to do is also to keep track of, let's say, those that got away. So maybe we had an investment opportunity, we didn't go for it, and it ended up being an amazing success. But also, these 99%, well, we learn a lot of new things. We learn about new business models, new services, new go-to-market strategies. And thanks to new technologies, we are better able to actually absorb that information, classify it, and reuse it for further analysis. So in a way, it enriches a lot what we do. Now, the upside, as I mentioned, much more information available, faster responses to entrepreneurs, significant productivity gains, and sharper data-driven insights. But the downside for us as venture capital investors is that there is so much data that we have to process. It actually can cloud and overcloud our work because we have so much to deal with. Sometimes it just delays the time for us to be able to actually really have an opinion on a project. As you know, information can very often be incomplete or just bluntly false. So I think that's why the role of an analyst is important, because you have to use AI or new technologies as a companion, but you have to have that knowledge and that common sense to understand where actually the total market size is completely rubbish or that the competition or information is totally off the charts. One thing that is also something that we have to look for as VC investors is that AI does not reinforce biases, right? You know that when you ask questions, you're going to ask questions in a certain way. You're going to look for some type of information, and AI is only going to reinforce your biases. I think that as VCs, what we're looking for are the outliers, the disruptors. So there is an important challenge for us to actually have a sort of reinforcement of biases where we all look for the same thing in the same type of businesses and not really looking at the disruptors. So in a way, our work is changing also because there's a lot of commoditization of information. It's very hard to see the differentiation. What about the founders? Well, for the founders, it's of course a very good tool to have these new technologies enhance the process of applying for funding. So you can go much faster preparing your pitch deck. You can gather data that investors look for. You can structure it in a very nice way. When they ask you for more information, you go back much faster. So once again, the feedback loops are much faster. So we think basically these technologies empower entrepreneurs. One thing that it also does, it turns entrepreneurs into beautiful storytellers. We know that most entrepreneurs are not so good, not always, to sell their investment opportunity. Well, all of a sudden, we have these amazing, super sexy looking pitch decks, but then we have too many. We'll come back to that in a minute. It also helps entrepreneurs to map investors much more efficiently, much faster. In the venture capital world, the way we work is we raise money, then we deploy it for a number of years, and then we nurture the portfolio for a number of years. What used to be very hard for founders was to say, okay, but who is this fund actually investing right now? Very hard to find the information. Whereas now you can find the information, maybe find the latest portfolio investments, actually find out that although the website looks really sexy, they haven't done any investments in the last 2 years. Find contact details of founders, try to contact the founders to see how that fund is doing. Is it really investing? Is it doing a good job? So it actually improves the capacity of entrepreneurs to do what we call due diligence and analysis on the venture capital investors. It also improves the reporting that entrepreneurs can do internally, obviously, within their teams, operational efficiency, but also when you have venture capitals invest, they require reporting from founders. And within our portfolio, we have already seen founders actually develop prompts and trying to accelerate how they can produce the reporting that is expected from investors, so that it takes them not 2 days to prepare it, but just 1 hour with the right prompts, just knowing where to find the information inside the company. But the challenges of AI and new technologies for founders is, although it empowers founders, it actually raises the bar as well, because it's much harder to stand out. Everybody has a very nice story. Everybody knows how to put a good PowerPoint together. Everybody knows what the metrics are that the VCs will be looking for. So, we get too much perfect looking pitches, and being different is really becoming a skill. And so we think that actually the future is relationship building. Relationship building is what is going to help us create the difference between this founder and investor relationship. The other important issue for entrepreneurs, obviously, is confidentiality. When you pitch to an investor, at a moment in that process, you're going to sign a non-disclosure agreement. It's really important as a founder that you know where you're putting your information, what type of information you're putting out there. And also for our teams, we are very wary about what our teams look at as information, where you put the data, because for founders, it's extremely important to make sure that you keep an edge and that your valuation is not spread all over the web, etc., etc. So basically, what remains unchanged in venture capital is that what we invest in are teams. And so that is something that will not change as of now, especially in early stage venture capital. We really want to meet the founders. We want to build relationships. Information in asymmetry is shrinking because we all have access to so much more information. But so basically team charisma from the founders and also from the VCs is becoming more important. The trust that we put in person, the warm relationships, that when we join boards, we can open up networks, we can make introductions, we can actually talk to people and feel their ambition, feel their vision, help in their execution capacity. That is something that remains unchanged for now and will remain unchanged. So finally, looking ahead, I think that AI for us, for VCs, is giving us much more deal sourcing opportunities. It creates better relationships where we try to spend time on what matters and we try to streamline everything that needs to be analyzed or reported, but make it efficient. It's great because we think there are going to be so many new business models that are powered by AI and these new techs, not only faster software, but who pays, how, what types of companies will emerge. All of this is super exciting because VCs love innovation and disruption. The challenges for us is speed, basically, versus depth. We go very fast, but do we go very deep? Do we understand what we are really looking at? And I think that's why having good analysts in our team is extremely important. It's about recognizing patterns, reinforcing biases, or actually finding the disruptive outliers. This is going to be the challenge for us. Of course, issues of data security, I mentioned it. And lastly, I would say that, we need to make sure that now that we are making venture capital investments more accessible, we're making entrepreneurship accessible, we have a responsibility, I think, as venture capitalists, to make sure that we continue to try to benefit as many founders, scalable, innovative founders as possible, without using AI to exacerbate disparities and reinforce differentiations, because what we're looking is for basically what stands out. So that was all for me. Thanks for your attention, and I hope you have some questions.
Two? Okay. So, first of all, congratulations for your talk. Thank you. Can everyone hear me? Yes? We'll start now the Q&A. You can start to scan the code up here if you have questions, and then I'll read them to Claire as they come on my screen. So, first question coming in: how do you choose your investors?
How do we choose the investors as a
Yes.
fund, I suppose? So basically, investors that invest in a venture capital fund, the ones that invest with us are usually cashed out entrepreneurs or SME owners. So it's really people that have been in entrepreneurship and really want to support the next generation. So the way we find them is they come to these types of events, or we find them in collaboration with banks and so on and so forth.
Okay, thank you for clarifying. Another question is, what would be your top 3 personal selection criteria?
My top 3 selection criteria for investing, I would say, well, it seems corny, but once again, the quality of the team. In the team, I would say the skin in the game, personality of the founders, and a bit seeing that, these are people that are street smart, not necessarily super well educated. A very large addressable market and capacity, I would say proven capacity to sell and early revenues.
Okay, thank you. Another question is, how has your attitude regarding assembling your teams changed over time?
Assembling the teams?
Yeah. Has your mindset changed, or has it been always the same?
No, I think that, in teams you always have 2-3 founders. The roles are always very well shared between the CEO and the technical person. I think what we are really looking for now, and we are very, I would say, focused on, is the quality of the sales team. I would say the go-to-market approach, the sales strategy, because more often than not, there's still too many founders that think that their product or service is going to sell itself. So that's what we're looking for, is really like, is there a sales strategy and who's going to head that sales strategy, and maybe having some seniority in there.
Okay, thank you. Another one is, what is the ideal deal to fund?
Well, the ideal deal to fund, we'll know about it when we've exited and it was a success. So I don't think that it's a very tough question. I would say that the ideal project is something that is disruptive, that is simple to use and to understand. I think those are the most beautiful projects. With a team that is really, I would say, intent in changing the way people do things. So it's not just adding a product or service, they're really intent on changing the behavior or something so profoundly that it makes their ambition extremely important.
Like the work culture and everything.
Yes.
Okay, thank you. Another question, how is Odoo helping your VC fund and team?
So there's a number of our portfolio companies, obviously, that use Odoo. Tomorrow we're actually co-hosting for the second time the 5 Minutes to Success competition. Okay. So you should definitely come there because there's going to be pitches. But so yes, I think it's about operational efficiency, as we mentioned, not spending too much time in cumbersome processes. So I think Odoo is certainly empowering founders for that.
Okay, yeah, that's great. Let me see. We have a few more questions coming in, but I see they are being written right now.
Can I take this opportunity actually to thank our analyst, Wail, who helped me with the presentation. Can you give him a round of applause?
Can we give a round of applause for Wail?
Thank you.
Another question is, what would be the main... Oh, no, that's... We went over that one. Sorry. Do you need people to have an AI edge?
Now, what does that mean?
Well,
I think no. But to answer seriously, I think we need people to be curious about new technologies. I think the worst thing is having being in a room of people talking about the service or market, and you can tell that people are not curious enough. And I think we need to be curious, right? So whether it's about AI or LLMs or whatever, I think you always need to go to conferences, get out of your comfort zone and see what's out there. It won't be necessarily useful, from the get-go, but I think curiosity is really what drives also growth.
Yeah, I totally agree with that. What is the future of private equity? Trade Republic decides to open private equity investments to public. and the future of funds in this kind of investment will be open to public?
So private equity obviously is much later stage than venture capital, and I think of course now at the European level, not only in Belgium but in other, across Europe, there's a strong wave to ask, for example, insurance companies or banks to actually help capital flow into private equity funds or venture capital funds so that we can actually have funding, capital for startups, for scale-ups and for SMEs. So I think it's definitely a movement. However, it's going to take time because there's a lot of regulatory hurdles and it's a lot about protecting what we call retail investors, so people that are not necessarily informed, and make sure that they know exactly how much money they put at risk for the benefit of the economy, but you have to be ready to lose everything you put in angel and VC, for example. Not necessarily private equity, is more growth capital.
Okay, well, thank you for your deeper answer. In the realm of artificial intelligence and solo performers, what are your thoughts on this emerging approach?
On the approach of, sorry?
On the
solo founders?
Yeah, I guess the artificial... they're correcting the question now, so let's hang on. Have you seen a change in profitability or return on the portfolio due to a great increase in workload capacity with AI? If the one-person investment can be vetted even more, do you see a correlation with expected return?
I don't think that operational efficiency is necessarily going to increase returns. It will have an impact on fundraising, probably. So how much money companies are going to need and raise if they're being really lean and efficient. And I think that venture capital investors like that. It's going to impact the way that they hire or where they decide to put the money or emphasis, if they can really streamline a number of processes. And of course, ultimately, it might lead to better returns. But actually what is key there is having the right team that is able to choose the right tools, recruit the right people, and not only have AI tools, but actually implement it across the board in your company, which is the biggest problem, right?
Yes.
The biggest problem today is not adopting new technologies, it's actually implementing it.
Yeah. Okay, thank you. We have 2 more minutes for a few last questions.
Okay.
Let me see. So back to the question from earlier. In the realm of artificial intelligence and solopreneurs, what are your thoughts on this emerging approach? I don't know.
I'm not sure I understand the question, to be honest, but I think solopreneurs is anyway not something that venture capitalists like. Maybe that's a good point to make, because when I think we, as a founder, you cannot do everything. So it's really important to actually try to gather more expertise from the get-go. It spreads the risk. It also, avoids situations where you're trying to do everything at the same time. And we're talking more and more about, the mental, I would say, the mental stability of founders. So I think that's really important. But VCs really like to invest in complementary teams, and solo founders, even if they're empowered by AI, is not a good investment thesis.
Okay, thank you. A very quick last question before we have to turn back the microphone. Could you please recommend any online courses for students to take to improve their AI skill set in the field?
Not sure I'm such a good how would you say, counsel on that, to be honest. Sorry,
Okay.
I cannot help.
That's all right.
VC courses maybe, but not about
All right.
AI.
Well, thank you very much for your talk. And please, everybody, a last round of applause for Claire Munk, who's the CEO from B Angels.
Thank you.